We're joined today by Mitchell Thomas, CFO of Latin Resources. Mitch, thanks for your time.
Thanks very much, David. Pleasure to be here.
Latin is clearly a momentum stock. It generates a lot of news flow, generates a lot of work, and investors love to follow the story. What were some of the highlights of 2023?
Look, so some of the highlights, 2023, as you put it, transformational for Latin Resources. And I look back on the last 12 months, and that's been my tenure with the company. It's just gone from strength to strength. So when I joined the company, the maiden resource at the time was 13 million tonnes at 1.2% lithium. So, that was a decent resource. But if you look to today and look fast forward to December when we released our second upgrade for 2023, we're standing at 70 million tonnes at 1.3% lithium, and there's still a lot more to come. So from a resource perspective, absolutely knocked the lights out, and the team in Brazil have done a fantastic job, and we're going to see more of that in 2024. In terms of other milestones, look, I think you get the resource, and that's a good start, but can it be a business, can it be an operating mine? And that's what the PEA established in September. So we released that to the market, NPV 3.6 billion Aussie after tax, just numbers that truly are eye-watering. And I think we'll talk a little bit about the market, but very much a project that can be funded even with the current sentiment. And I think that's been reflected in our share price, which hasn't come off as hard as some others in the sector. I think I'm going to have to think through a lot of things, but I think probably the last milestone I'd focus on is that we submitted the EIA in late December 2023, so just between Christmas and New Year's, which is always convenient. And I think that's just really a punctuation mark on the fact that we want to be a sustainable miner. And so this document, excellent job by the team in country, but also supported here in Perth, really just articulating exactly how we're going to be a sustainable miner. And look, the feedback has already been exceptional from the government, so looking to continue that into 2024.
You touched on the lithium market. Clearly it's come off. How important is it to stay focused initially, but also to understand where you sit in the market and the economics of your project?
Yeah, look, it is a little bit distracting, but for us, we just need to stay the course. The strong positive for us is that we're very well funded. So we had 52 million at 31 December, and so look, we are spending through that with our drilling program, but we've been very clear with the market that we are not anticipating a raise in 2024, and we've got budgets that have been approved by the board supporting that. So overall, we're in a very good balance sheet position. But look, the market, David, you've been around the minerals industry for a long time. I think in the last 24 months, we've probably seen 3 or 4 ups and downs in the lithium sector. I think what you can do is really look to the professionals. And so for the PEA that we released, we used Benchmark and Fast Markets as our price reporting agencies. And it's actually funny because the next year or two, there is a bit of forecast softness in the lithium price, just as supply ramps up and perhaps demand isn't as high as expectations. But when you look at Fast Markets, Benchmark, and also a lot of other, providers out there in the market and investment banks, the medium-term to long-term outlook is as strong as ever. So for us coming online in mid-2026, we still feel very confident that we've got an excellent, mining project for the industry. And that's really what I would say is underlined by the fact that we've got a very low-cost jurisdiction in Brazil. So, your energy's low, your labour's very low. Executing a project is, from a capital intensity perspective, very affordable against WA. So, look, I think things are looking, very good for us as we ramp up to FID later this year.
And clearly you would be in discussions with potential offtake partners, project finance partners. Are they nervous, or do they see the benefit of securing supply now as it potentially move into a supply crunch as your project comes online?
Yeah, so look, we are in a process, and I'd have to say that it's the opposite of nervousness from them in terms of market sentiment. I think the nervousness from them is actually securing feedstock. So if you look at WA, all the existing operations are, to the best of my knowledge, tied up in terms of offtake, and it's all heading to China. But you've got so many facilities being built out in the second half of this decade, not only in Asia, so China obviously has a strong kind of foothold, but in South Korea, Japan, there are facilities being contemplated. North America and Western Europe, there are facilities that are being funded and backed by some very reputable companies. Look, the challenge for them is finding feedstock. And I think when you look at Salinas at 70 million tonnes and growing, we've got none of our offtake signed up at the moment. There has been a bit of a frenzy around the offtake process that we're running. So we've actually just gone through 2 phases. So the first phase has been cut. We're into a second I guess, more restricted phase in terms of the parties that we're looking to get a binding agreement with, and that's progressing to schedule and looking pretty exciting. So it's all coming together quite nicely.
A number of milestones hit in 23, but clearly some big milestones coming in 24. What are they, and what should investors be focusing on?
Yeah, so look, it's going to be a big 2024. Look, we thought 2023 was big, but we're just taking it to another level this year. Look, the DFS is really going to pull everything together. So we released to the market that can be expected around mid-year or Q3 2024. We have Worley, we have Minsol, we have SGS working on that, and they kicked off in 2023. And look, the initial work we're seeing is very positive in that, you know, sometimes you don't know what you're going to get between a PEA and a DFS, but for us the mandate has been crystal clear in that we want to make things even better. So what we delivered, we want cost to be reduced, we want capital to be very competitive in the market, and we also want to look at larger production scenarios. So we'll give updates, you know, ahead of kind of completing that again in Q3, but it's all progressing at a very nice pace. Look, in support of that, there will be 2 further resource upgrades in 2024. So one will be the maiden reserve supporting the DFS, and we can expect then another actually before the close of 2024. And then everything else that we touched on offtake, we're also doing a project finance sounding in the market. We've got permitting, and then this will all culminate in FID before year end. So another transformational year for LRS ahead.
Exciting times ahead for Latin and its shareholders. A lot of momentum building. We watch with interest. Mitch, thanks for your time.
Thanks very much, David. Cheers.